All right, let's get more on Intel. Bring in Fast Money friend Gene Munster. He's a managing partner of Deepwater Asset Management. Gene, what's your take? Are you as dour as some of these guys here on the desk?
You know, Melissa, I was doing multitasking there. I was listening to the call and kind of picking up a little bit of negativity from the desk. So appreciate that recap. The answer is yes, I am. And the call kicked off really talking about Intel being an AI everywhere company, and also talking about this near-term weakness in March was temporary. You saw shares kind of move up a couple percent in after-hours trading when they talked about that, and also talked a lot about new products. And I think that is, the central point to this whole Intel story is, will their new products catch on with potential customers? And when they talk about the AI opportunity and being an AI everywhere company, the opportunity is really the sweet spot of this is in the GPU market. This is the most competitive market. We all know this. And when we think about where this company is going to go down the road, to get to, they're going to grow revenue this year, I call it 15% maybe, to get to a revenue growth rate that is going to be more AI paradigm shifting, like 25, 35% plus, you got to get into that GPU market. And I just have questions about how you're going to compete with essentially, number one is NVIDIA, two is AMD, three is the hyperscalers. They're all making their own chips. And so they're in the fourth position trying to compete in this market. My sense is that this is Intel's growth. It's going to grow at 10 to 15%. We're not going to get the big lift that we're hoping for with AI. So
what should it be valued at if it's just only going to grow 10%? And that's the run rate here.
It's right now it's trading at about 27 times next year's earnings. It's kind of surprisingly a similar multiple that NVIDIA trades at. They're about 30 times because people are looking at NVIDIA, what kind of the out year is going to be a slowdown there. When you look at AMD, that trades at 46 times. So if you put all this together, Melissa, I think that this should probably trade right around where it's at and probably grow earnings right around 10%. And when I put all the pieces together, I just think there are better ways to play the AI silicon opportunity.
So, Gene, you just mentioned that Intel, not only do they have to worry about catching up to, let's say, NVIDIA and AMD, but the hyperscalers, which are the big customers, right? So these big cloud players, Microsoft, Google, they've all signaled that they're, as you just said, going to be designing and making their own GPUs. Doesn't that just place these kind of second-tier players that much further behind, which you're suggesting, but doesn't it pose a risk for NVIDIA and AMD as we get further into this year, and as the cost of compute is something that they are really going to have to start thinking about as they're trying to go commercializing a lot of these products? That's the hyperscalers.
Yes is the answer. I think that from a competitive standpoint, NVIDIA is... they're in a great spot, but they're going to have more of a challenge in the years to come. They've gotten just nothing but good news in the last few weeks, whether it's come from Meta or there's been rumors about how much Apple is spending with NVIDIA. So this is a great time for NVIDIA. But these big tech companies, they don't like spending $5 billion, $10 billion a year with NVIDIA. They want to try to do that in a much more cost-effective way. We're talking about 30% of many of these companies' CapEx is being spent on NVIDIA chips. And so I think that there is an opportunity for these hyperscalers to do better there competitively. We'll see how that plays out. And you do see some of those street estimates going. We're talking about 300% growth for NVIDIA this year, going to high 40s this year, and next year, call it high teens. And so I think that I'm not suggesting that NVIDIA is the best way to play the silicon play. I think there are private ways to do that. Those are opportunities. So yes, I think that the kind of untold story when it comes to silicon is related to what the hyperscalers are doing.
Here's a bit of an Uncle Charlie for you, Gene, but I know you're capable.
That's a curveball. In layman's terms.
And Gene knows that as well.
Thank you. I did not know that.
Of course you do.
Yeah. You're Googling it now.
I am.
Understanding that Intel might actually be a bit of a homeland security play, given everything that's going on. In this political landscape, potentially what could happen in November, and then new sanctions against China, could there be a re-rating on Intel just on the back of that alone?
Yes, at Deepwater, we owned Intel. We owned it a year plus ago, and we gave up on it when they just kept having these issues. And one of the central reasons why we owned it was for that, is that this kind of domestic theme, I think it is a benefit for companies like Intel. I think it's in the benefit category. Unfortunately, when I put that positive and think about the other competitive dynamics and the product dynamics, and also the fact that they're not only building chips, designing chips, but also building them. The only other company that does that in the world is Samsung. They don't do a very good job on it. Is when you put all that together, I think, Guy, that is a positive, but I don't think it changes the calculus on the stock.